Well, you're going to have to wait until the Q&A, really, for any news. Janet Yellen's testimony, just over 5 pages, about as bland as it could possibly be. The economy is growing at a moderate pace so far this year, she says, picking up a little bit in the second quarter after a slow first quarter. Growth will continue to expand at a moderate pace in coming years, she says, creating more jobs and pushing inflation towards the Fed's 2% target. Inflation, when it will rise and by how much, is the one uncertainty for the Fed. It is higher than it was at this time last year, but lower than earlier this year. Speaking for her colleagues, Yellen blames a few unusual reductions in certain categories of prices that will hold down the calculations of the annual rate until they drop out. She doesn't elaborate, but in the past she's blamed falling oil and cell phone prices. So what does it all mean? Well, more gradual, in her words, rate increases until the Fed gets to a rate that neither constricts nor expands the economy. Where's that? She doesn't say, but it's not far from where we are right now. As for the balance sheet, nothing new. They expect to begin this year reducing the balance sheet by adjusting their caps, and they hope to reduce it not to an ultimate size that you can particularly tell, but it will be smaller than it is now, larger than it was at the beginning of the financial crisis. Fodder for discussion later. There is a defense of the Fed's aversion to monetary policy rules. She may get asked about that. Lots of rules, she says, the Fed consults, but no one rule gives you the answer. There is nothing on bank regulation or comings and goings from the Fed, including her own status. So bottom line is, until the Q&A, maybe, there's no reason to adjust your trading positions on the Fed, guys.
I gotta say, Mike, as you're reading it, people are laughing around the table and joking. It's like a cocktail party here in the morning. Carl, though, you had some insight.
I'm not laughing, Alex.
Oh, he's not laughing. He's very serious. Carl's very serious.
Now I am, but I wasn't laughing.
Tell me.
Two things that I beg to differ with in the initial pass of the headlines here. One, she says, FOMC does not intend to use balance sheet as policy. This will have huge implications on policy. So I think that maybe that headline is parsing the issue of the balance sheet operating quietly in the background. I'm not so sure it will be quietly in the background. Time will tell if they're as gradual as they hope to be.